Hi guys, welcome back to the channel. It's a new month. It's the beginning of July. I've just closed one of my GBP USD trades. Why? Because we have just come close to our support there, and today is a Friday. I don't intend to be holding trades through to the weekend. So fortunately for me, I got in around here, and yeah, I just closed one of those good trades there. Yeah, some good trading. Uh, so yeah, I apologize for being away, for being quiet. The thing is, I think I previously mentioned it in some previous videos that I don't just do trading. I have other businesses that I do also run on the side. And one of those businesses where we do web development, we managed to get a tender, a small tender, to do a website for a government department. So they needed that thing sorted as soon as possible. Unfortunately, that's all that I'm going to say at this point. So that basically occupied my time for the past, I think, week or so. So we're trying to get that thing sorted out. So today, beginning of the month, and it's a Friday, I managed to squeeze in some time to what? To do this video. And also, whilst I've been away, I've been trading, but I just was not sharing the videos because I could not find time to do that. But anyway, so today's video is basically I've done a guide because you already know how I trade. If you don't, watch the videos on this channel, and you can download what you see here, whether you also want to use it in your own trading. The video is also on this channel. If you haven't, go ahead and download. Everything that we do here is for free. So I was teaching my brother to trade as well, and I noticed that he has an understanding of trading. He knows how to analyze and stuff, but yet he still loses money. Why was he losing money? Because he was taking a whole lot of bad trades. How often has it happened to you that, of course, you know how to trade, of course, you know what you're doing, you know how to analyze, you've done courses, you've done everything, yet you lose money? Sometimes it's because you are just taking wrong trades. You are taking your trades at the wrong time, wrong trades. So I did a guide for him. I just basically designed something for him to help him with trading. And I basically just decided, well, how about I just share it with you guys, because I do try to share everything that I find with you guys. Forex robots, indicators, books, everything. The links are in the description box below. So I basically have done a short guide that I believe gives you the basics that you can use to avoid bad trades. To avoid bad trades. It's not like teaching you a strategy or stuff like that, but basically I'm teaching you or showing you how to avoid bad trades. So let's just go to the guide. So this will be the guide. This will be the guide. The link to download this thing is in the description box below. It's in PDF format, and you can basically download it and save it on your phone or your laptop, or you print it and you paste it on your wall. Whatever you choose to do, well, it's up to you. But I am hoping that it gives you what, some assistance, or is of some benefit to you. I've basically done this myself, so nobody's going to come to you and say, why are you using my thing or stuff like that, because I've basically done this myself. And you are free to share it with whoever you choose to share it with. I don't mind. Okay, so what you want to do to avoid bad trades in trading. Before you trade, there you can see it says before you trade. What you want to do is you want to first of all determine the trend. I think that's one of the mistakes that people make. Sometimes people just rush in and they trade, but they are not aware of what the trend is. Sometimes you're lucky and you're just trading along with the trend, but sometimes you are actually unlucky because you actually are buying in a bearish trend, and what is usually a recipe for disaster. And sometimes you are like, what happened? What happened? It's because you were trading against the trend. What's the trend? I'll leave it up to you. Basically, for example, I know people are trading different time frames, different styles, different strategies and stuff. But as a general idea, let's say if you love to trade on the 15-minute time frame, then I think you need to have an idea of the trend on the 1 hour time frame. If you are trading 15-minute time frame, have an idea of what's happening on the 1 hour time frame. If you are trading the 1 hour time frame, like I usually do, you definitely need an idea of what's happening on the 4 hourly and the daily. Sorry, on the 15-minute as well, you need an idea of what's happening on the 4 hourly. Then, if you are on the 5 minute, well, you can use the 1 hour, but 15 minute, use 1 hour and 4 hourly. Have an idea, especially 4 hourly. Then on the 1 hour, you like I do, then you want to have an idea of what's happening on the 4 hour and the daily, and you can even use the weekly. Obviously, if you're on the 4 hour, if you are trading on the 4 hourly, then you need the daily, the weekly, and sometimes the monthly as well. So, what's the trend? I will leave it up to you, depending on the time frame. But what are you looking for trend? If you see that the market is sideways, if you are on Euro USD, GBP USD, or gold, or whatever that you are trading, or with stocks, whether it's crypto, whether, and you just notice that the market is sideways, there is no clear trend. My advice is what? To sit on the sidelines. That's why there is an X there. uh, you can read a book, or you can learn about how to turn your strategies into forex robots for free. You don't need any skills to do this, like it says here at my other channel there. So if the market is sideways, don't do anything, go and learn something. Why am I against trading sideways markets? I know people do that. They trade ranging markets and things like that. I've also done it, and sometimes I do it against my best advice. But the danger in sideways markets is, for example, in this box. Let's say this is our sideways market. Let's just use what we're seeing here, and it's going up, going down, going up, going down, going up, going down. The problem is you can make some good, a few good trades in here, but there is a danger that you might actually be caught out when the market what breaks out of what this range. When it breaks out, and you happen, let's say you happen to have sold here, and it actually breaks out to the upside, then you're in trouble. Let's say you bought here at this level and it breaks down, you're in trouble. That's why sideways markets are usually a good idea to just avoid. But if you have money for it, if you have appetite for it, well, it's your money, you do what you want to do. But otherwise, stay away from sideways markets. Find a market that's either bearish or bullish. You can clearly see that this thing is going up, or this thing is going down. Now let's say we have a pair that we've identified that is bearish. For example, what has been happening on seems like I closed out my trade early there because still has some movement in there, the GBP USD. Well, we'll see what happens. So let's say you identified a bearish thing like what we have on the GBP USD. This is 4 hour time frame. We have GBP on GBP USD. What we have here. What you want to do is you first of all just want to check if price is at a resistance. somebody is going to like, huh? What are you talking about? Okay, so this is GBP USD, and we are on the 4 hour time frame. Let's just drop down to the 1 hour. Okay, so we have seen that GBP USD is dropping. How many times have you seen people sell, let's say there? A person sees it's dropping, then they rush in and sell here and see what happens. It starts pulling back, just starts pulling back. And this is on the 1 hour time frame. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 25, 26, 27, 28, 29, 30, 31. For around 31 hours, it did not go your way. Many people would have what? Closed their trades or would have been taken out at stop loss. How much is this? It's about 50 pips. Usually textbooks talk about 30 pips. So you would have been what? Been taken out of your trade, and you think, what went wrong? I thought this thing was dropping. Yes, it's dropping, but you entered the wrong time. What you should have waited was for resistance. We can see here we had a support here, a support level here that became a resistance. So yes, it broke through and you were late. Wait, don't do anything. Wait for price to come back to the support that has now been turned into a resistance. If it doesn't come there, well, that's fine. That's a bit of trading. There are always going to be a million more opportunities in the future. Rather than you coming here and selling here and being taken out and still price what comes back. So if you are not patient enough to wait for price to come back to resistance, well, go find something else to do. Go fishing or go, I don't know, find another pay. But when you rush in and just take this blind trade because the overall trend is selling, then you just take a sell anyhow, you are going to be in trouble. This is 30 hours. This happened in 30 hours. It's going to test your patience. If you're not taken out by the drawdown or your stop loss, it's going to test your patience. You are going to doubt this trade and you are going to close it. And then lo and behold, it goes the original direction. So rather than this, wait for price to come back to what? To resistance. That's what we are talking about here. So price is now at resistance. Is it not at resistance? Don't do anything. If price is not at a resistance level, don't do anything. Sorry. And if it's at resistance, good. Now we find one or two more confirmations. For some people, they are looking at candlesticks. Maybe if the candles are is like bullish engulfing, bearish engulfing, or some people are looking for patterns. Is it an M pattern that is formed? Is it three candles in a row? Well, people are looking for various confirmations. I'm not just saying take things at a resistance blindly, but add one or two or three confirmations on top of this. Then what? Then you sell. That's how what you could have taken this trade perfectly. And the opposite is also true for bullish trends. Let's see, since I'm on GBP USD chart, let's see how to do this, how to illustrate this. Okay, let's ignore this line, or maybe let me take it out. Let me just take it out. No issue hiding this because what? You can download this. The video is on the channel, so there's no issue hiding this. Let's say, because I'm looking for something that looks bullish, let's just drop down maybe to the 15-minute time frame so that I can find something to illustrate that with. Still nothing. Maybe we'll use this example then. I don't know, it doesn't make sense for me though, but I wanted something. Let's find something that might be in a bullish trend. Point down as well. Let's go back to the 1 hour. Okay, something that we can use. Finally, go back to the 1 hour now. So what we want to look for is a bullish trend. Let's say we spotted a bullish trend like what we have on this section of USD/JPY. There was a bullish trend going on there. Now we want to look for price being at support. Somebody going to say, oh, the mistake again that people make is what? They see price is going up, they buy. They place a buy there, which is what? A huge mistake, because this will test you. This will test your patience, and it's going to test the margin in your account. If you don't have enough money in your account to hold through this, you are in trouble. If you don't have the patience to hold through this 1, 2, 3, 4, 5, 6, 7, around about 7, 8 hours, you are going to be in trouble, and you are going to lose faith in your trade. You are going to lose faith in how you are trading. Instead of doing this, of just buying randomly, because we are in an uptrend and you just buy randomly, what you should instead wait for is to find a level of support, either there or there. We have something there, either here or whatever level of support that you can find somewhere there. Now when you place your buy at this level of support, it has got better chances of what? Taking off in a bullish trend than just randomly placing a buy. If your account cannot handle it, or if you're not patient enough, you are going to lose that trade. So that's what we mean here. So is price at support? No, don't take the trade. Yes, fine. Now let's look for extra confirmations. Whether you are looking for your double patterns, you are looking for a bullish engulfing, you are looking for tweezers, whatever people use. Then we start talking about what confirmations, and if we have enough confirmations, what we place our buy at support. We place our buy. So what happens if it doesn't come back to support and you're waiting for a support that never came? That's the beauty of trading. There are always going to be millions or billions more opportunities. We don't touch it, we don't do anything. We go find another pair, or we go and do something else. So yeah, I hope this simple guide gives you an idea. If you don't trade this way, at least it can give you an idea of how you can develop what? A rules-based trading strategy. A rules-based trading strategy that you can use for yourself. Let's say you don't trade this way, but at least it gives you an idea of how to develop your own rules-based trading strategy. Again, the link to download this thing is in the description box below. Otherwise, guys, I hope I've been of help. I'll see you in the next videos. So subscribe, like the video. There are links in the description box below where you can download Forex robots, books, and other stuff like that. I'll see you in the next video, guys. Bye.